What I would like to do right now is show you an update on the silver chart, and there seems to be a double confirmation, triple confirmation on the indicators. And if you look at the parallel lines that I've got set up here, you'll see this violet line that goes across the bottoms. Now we have this definite low here. I made a parallel line across these 2 points, and they span a distance of about 2 months, making them significant low points, and I made a parallel to the top. Now this top line is going to represent a resistance level, okay? So you've got this resistance going on here, and then we combine that with a 20 period moving average on the daily, which is this yellow line right here, and that is also combined with a downward sloping resistance line across these high points. Okay, now that spans about a 2 month period. So when you've got these candle tops or bottoms that span over 1 to 2 months, in my book, they're significant support and resistance levels. So if you look at them all together, and then you ask the question, well, why is it we had the pop up? Well, obviously Bernanke, anytime Bernanke's talking, the market's going to be volatile. Take a look at the bodies of these candles and how this resistance line suppressed these candles from being much further than that. And look where we closed here. So everybody's all excited thinking, oh my God, that might be a bottom. But the next thing you know, you're right back down and you've given back 50% of that candle. There's a resistance level. Here's a 20 period resistance level. And then here's this channel resistance level. The other thing I wanted to present was I added in the Fibonacci's, and I found it to be supporting of, and I didn't mean that as a pun, but the support levels that I managed to locate previously on my last video are being confirmed in the Fibonacci numbers. And that assumes that the low and the high that I've selected is valid. So what I want to do is back up and show where I've taken the low point for the Fibonacci and the high point. And you can kind of be your own judge on this, but let me get out there and try to do this as quickly as possible so that this video doesn't end up being really long. But my Fibonacci low point, I believe that's this line here. So I need to go out further than a 2-day, about a 3-day time period. Okay, there's my Fibonacci low, and it's 2008, about the end of 2008. You'll see a low point on silver. And then here's your high point, okay? So that's all I wanted to basically show here, and I got my 100% at the top, okay? So now if we zoom in at these support points, where I've mentioned in my previous video that we don't have any support until we get down to about 1748, okay? That is a verified support level that, and I don't want to have to move the chart way back to past 2 years to find that. I just want, that's on my other video. But the Fibonacci level of 23.6 is relatively close to the previous support level. Okay, now that's a double confirmation of 2 separate indicators. Okay, so I find that rather remarkable. Now, just sitting here, I notice another double indicator, or I would say maybe in a triple indicator. We could put a support level across the lows of these 2 candles, this one here, along with that one. If we were to project into the future an estimated ETA time of arrival for hitting that price, take a look at what comes up here, okay? If this continues down, kind of depends on which one of these resistance levels are more significant. If this thing follows along this line, okay, you've got sometime in June 4th, that you could end up down here at the ETA. You could just about predict sometime in the future when you're going to start seeing these levels hit, and everything's valid. Okay, these 2 candles right here present a support level, which can delay the time at which we hit the 18 or the 1748, 18 being the Fibonacci, and the 1748 being a previous price level. We may not see this level until sometime around June, okay? Around the 5th, you could almost put it there, you know, but if things get crazy and you have a dropout, you have another one of these major dropouts, you know, that could happen sooner, but what is the probability of a price dropping that quickly? If you look back at these red candles, it's kind of been slowing down. You know, the sell-off, there are sell-off points, but they don't happen usually this drastic. So this thing could take a while before it gets down to these prices. So what does that tell me? It's like if in the end of this week we don't make it down to $17.48 or $18, that doesn't mean that what I'm saying is invalid. It's just saying that if we project out into the future here and we use these lines as like a support level, you can see that time, we may not get there until sometime in the middle of June, okay? If we project into the future here, okay? So I just wanted to point that out, and what I'm adding that it wasn't in the previous video is the addition of the Fibonacci and some of these other double and triple confirmation of support and resistance levels, okay? And one of the other things that was coming up, and okay, the other thing that also came out of this was the resistance level on the 20 period on the daily, and I have to go back to the daily time frame, and as you can see, here's the 20 period. We have a resistance on the 20 period. We have a resistance on this descending trend line. We have a resistance on, I don't know if you want to accept this Fibonacci here. There's that has come into play here, and it's quite remarkable how close that you know, the 38.2 on the Fibonacci is a resistance. So there's multiple indicators here. Okay, and you have, you know, most traders are going to use some type of an indicator. The other thing to look out for is the Bollinger Bands, some of the relative differences in the tightness of the Bollinger Bands, like right here, look how tight it gets here, then all of a sudden you have this major price change. Okay, and then right here, maybe it doesn't tighten up that much, but this was such an amazing price drop that it may have been a very tight Bollinger Band, but by the time it made this major price drop, it distorted this back out again. But what you can see here in the Bollinger Band getting very tight is that it did follow up with a major price move. If I in the future see a tightening of these Bollinger Bands, expecting a major price drop down here, you could have a price drop. If big traders are looking for these levels, that might be their indicator of getting in, okay? Irregardless of whether you believe in silver as being manipulated or not, traders do trade by these price levels, okay? And my previous video explains where I got these from, these numbers. There's, you know, 1748, you got an 18, sometimes you can get like a $14 previous support level, and you can go out and look for those yourself. I don't want to spend any time going over there because it was several years ago that we hit those levels, and they are very prominent lows that could indicate a support level. So that's all I got right now, and it's basically just more information on what things are influencing the price of silver and where I believe it's going to go next before it goes higher. I think it's going to hit a point, and then it's going to just, you know, do what it normally does. Stocks go down until they hit a support level, and then they turn around and go back the other way. A good example is Netflix. Everybody thought, oh my God, the company's over with, and all it did is went down to a support level. And had I done my research on that, that would have been a major moneymaker, you know. But these support levels do come into play. The traders that have all the experience in the world with the big bucks, they use these, okay, and it's what moves prices around. So that's about all I have on this video, and thanks for watching.